All right, guys, we're back, and the crude oil report is about to come out. The next 15 seconds or so, got the counterpunch chart on the right, 377 tick. Got the spotlight chart on the left, lower left, with crude and unleaded gas on the upper left. And there it is. There's the reaction coming out. Counterpunch predicting that, but that's not a trade we're interested in, of course. There's no way to even get in on a trade like that. You get filled at your target or worse. So we'll wait our 2 minutes. Looking to mark the reaction. That's basically where it came out right there. So we're still waiting. Could that be the end of our reaction to the downside? Definitely got about another 50 seconds until we start looking for a setup to take. So far, there isn't one. This is looking like the end of the reaction here. Kind of a tight range. Not sure if we're done testing the lows or if it's going to come back up, but here it is trading up to the middle. That balance line or signal line should be the first thing it tests, right there in the middle. But maybe it's going to test the lows instead here. Doesn't know what to do. We'll find out. No setups at this point. Dennis, that's the typical default crude oil chart we've been using forever. This default, basically. This is the counterpunch trader in, invention chart. This is the one that invented the strategy. Not much has changed since the 8 years it came out, and it's the same chart. Right on the Owners Club website, member site. So that's a preliminary long possibility, but the white trade requires the histogram confirmation. It did not yet come. And so that's not a trade to go long. It's a warning that we could get one. And if we were to get one, the entry would be at 71.83, but no setup yet. I'm just kind of vacillating right in the middle of that range. Sure thing, Dennis. That's a long. Heads up. 71.83 triggering in. It did happen fairly quick. We did get the heads up on it. That's targeting 72.09 and 72.19. The stop is at 71.59 and the money management is at 72. Target one, right beyond the range. I don't know if it'll give you a second chance to get in if you missed it. Definitely had to be quick on your toes. It may pull back. Did just hit the entry again. Again, that stop at 59. targeting 72.09 and 72.19. So kind of tough to have to trade through that resistance overhead. And there is a stop and reverse. This is looking like a lot like the other day, last week. 67, this is where you flip to that market order matrix with the template. It did not trigger in. Remember, we make the 2-tick adjustment. That may save us here. So the stop and reverse is at 67. And it could come up and cancel. Still in the long white trade. And this is back to the earlier question about key level adjustments. This is a stop and reverse adjustment where we have the 2 ticks extra to try to protect the original trade, but we're willing to flip over in the other direction if we have to. But the price is trying to stay long here. It's got to work through this overhead resistance right in this area. You could see it very clear, not only by the lines, but by the price bars themselves. Will it get through it or not? I don't know. Hopefully. The short order is still valid. It has nothing to do with the closes on the other side of the balance line because the original trade triggered in. Now you can cancel the short order now. That's canceled because it got long now. And we're still in the white trade. So this is just without overthinking things. We're following the dots on the chart as far as our canceling trades. The short trade adjustment saved us from getting short. At least that's canceled because it came up and hit new setups. You see? It also hit the stop, what would have been the stop. So the white trade, we're still in it. And the rule, 5% art to trading, that's it, not overthinking things, kept us out of the short trade and in the original long trade. These are rules that have been well established for a long time. Just doing it the same way every time. We need to get up to 72 to get to risk-free, and we missed by 2 ticks. Hopefully resistance becomes support here and we can get a push higher, and hopefully with energy. But it could fail. Remember, this is the reaction. This is right when the report came out. So there is resistance here, and it's got to push through. It's testing that level. Where this runs into problems is when it vacillates back down into the middle again and can't seem to break out of its reaction range. But we don't know yet. Definitely dealing with the price level here that's trying to work through either up or down. Having a hard time doing either one. Good morning to you, Ivan. If you guys wouldn't mind, please hit the like button for me. It's always helpful. We could get threatened with another stop and reverse possibility here. I usually like to keep my stop at the new place where we pushed it up to 67. I left it there. That's a decision that maybe you all have to make. But now there's another stop and reversal, and this time's at 74. So 74 is a stop and reverse. That's adjusting down from 77. It's a 3-tick adjustment. Hopefully it's enough to keep us in the long trade. But all we can do is follow the rules, and that's it. It did not yet touch the original entry, but you could see the difficulty getting through where they're at 50 and the 200 moving average is showing us on the chart there. So there's one bar that closed above the signal line. If this one closes above, we'll cancel the stop and reverse. And this is, we talked about this earlier today. This is the type of thing you want to practice until you get really good at it. Now it hasn't canceled yet. It'll stop printing depending on where this bar closes. If it cancels, you'd watch your tick counter and see, looking like it's a good chance it's going to cancel, but we got to wait. And there it is. And money management and full target. Move your stop up, lock in your tick. That was nice. See how the rules helped us? Look at the perfect target. Make sure you got filled. Your stop should be at break even now. It will move up again in a moment. Actually, you can put your stop at 92. The stop should go to 92 now. And pushing up to target 3, and the stop moving, not quite target 3. You can move your stop to 94. Move your stop up to 94, and there's full target 3. So 1 and done today, targets 2 and 3. Anyone trailing, move your stop to 97. You can borrow the purple stop. It is now tracking the signal line properly. 71.99 now is your stop. The high end of the range there. How does it look? Well, Spotlight is the chart on the left, lower left corner, JDS, with the 8-point momentum bar, 8-tick momentum bar, I mean. And so, oops. It hit its target 1 objective. It was 1 and done as well, but target 1 was only 10 ticks today. Counterpunch ended up better today. Yeah, John, there you go. And I was going to say, you were asking about key level adjustments and advice. And, well, we weren't trying to be more than a 1 or 2% artist today, right? We had our rules. We knew what the adjustment was. It was already reduced to a mechanical rule. Not that the dots followed the rules. They don't, because I don't have the dots set up to do that. There's no way to set the dots up to do it the way I like it done. So we just make it a rule that we follow manually. But it's still a mechanical rule. And it comes from the 5% art to trading. But because it's been reduced to a mechanical rule, it's more like 1 or 2% that we're artists now, right? We weren't artists in this case. We were just following the mechanical rules. There was no trading art involved here because it was all mechanical rules. Not necessarily coded in the software, but definitely in the trade plan. So, and notice the stop did not move up. We're still in the trade. In order for the stop to move up, we need the bar to close above our crocodile pit line, the signal line, balance line, whatever you want to call it. It's the line in the sand that marks the balance of power between buyers and sellers. So if this bar closes above the signal line, which is at 72.12, we'd move the stop to 72.09. 2 ticks below, and then subtracting 1 tick off of the key level of 72.10. We put it at 72.09. So it's good to anticipate that because it could push up and close like right up in here, and then you're going to want to move your stop and take advantage of that. You could give it looser, more room, move it below the low of that bar. It just depends. This is where style comes into trading, but it also gives you a chance to lock in more profit aggressively. It looks like it may close above, and it could give you a bigger push, and you may want to only put your stop down Notice the stop moved to 72.09, but the low of the bar is 06. Maybe you want to give up 5 more ticks and put your stop at 04. But look where this might close. If that closes above at 72.15, we'd move our stop to 72.13 if it closes above, because it may give you another push higher here, and it might be worth keeping your stop 5 ticks lower. It's definitely $50 a contract, and everyone has to make that decision. This is where the art to trading comes in. So the original stop was hit, and you would be flat. If you're interjecting a little bit of art to trading, maybe you kept your stop down at 04, and it may or may not work. Might hold you in for a bigger trade, or it could stop you out for 5 ticks less than you would have had. And it did just stop out, didn't it? Yeah. So whether you were out at 09 or 04, the trade's over, was one and done. We had 2 stop and reversal possibilities. One of them hit the original entry to go to reverse to short, but our adjustment kept us long. The second one never got to its original entry, nor the adjusted, obviously. So just staying long in the white trade. Look at the accuracy of the targets on that green trade and purple trade for target 2. We were in the white trade, of course, but it just goes to show how these setups are so dynamic. That's all she wrote, guys. Hope you enjoyed the session. Let me know if you have any questions. Otherwise, we're done. Please hit the like button for me. John will be here tomorrow. I believe I'm back in here on Monday. Yep, that's how we like it, John. Short and sweet. Hope you guys enjoyed the session. Everyone have a wonderful day. See you next time. JDS, does a chop graph help stay long? Not really. That's not what we use it for. I mean, there are many usages for that indicator that you can do beyond the strategy of Counterpunch Trader. This is showing you the fast trend on a higher time frame chart. So just take the chart, multiply it by 5. This is kind of your idea of going to a slower chart, right? So that histogram kind of simulates the fast trend on the slower time frame. And then the chop dots are filtering out some trades only. If you're above the 50 moving average, you're not going to take a short setup where the 50 moving average slices between your entry and your target, or vice versa, coming from below to above. So this particular histogram is only used to corroborate the white setup as far as how we use it for setups with Counterpunch. But there are other usages for this indicator, and you can certainly try different things and create your own method of trading because it gives you useful information. Again, though, I go back to my earlier comments to you. It depends on your rules and what you could test and prove to yourself. So that makes this a very useful tool because it's so visual and it's right there. You can see when the fast cyan line crosses over and closes below the slower yellow line, which is what we need to corroborate the white trade, which was based on these dots. That gave us the white trade, which you could see almost a perfect target 2, actually a perfect target 2. All right, guys, there you have it. See you next time. Don't forget, John will be in here tomorrow, and everyone have a wonderful remaining several days of your week, and I'll see you on Monday.